Okay, what's up? What's up, everybody? So I kind of want to show you this play. I missed it, but this would have been a really nice play, as you can see. So this is Fire Eye. As we all know, they got hacked. Um, Obviously, we could tell they got hacked this day because that drop. But as you see, we have a gap right here, right? So as we see here, since we have this gap, what this gap is telling us is that Um, typically, most gaps need to get filled. You have an up gap or a down gap. Typically, when you have a gap that is from news or anything like that, unless it fundamentally changes the company, price will typically revert back to go back towards that gap and fill it. Most gaps are filled um, within the first, I believe it's the first 6 days, five days. If it's a up gap, so I mean, it means it gaps up and it's a bullish type of gap, right? Then you have another kind of gap where it's like a bearish gap and then price drops down. So when that happens, typically price will fill it within 9 days. Now, if it doesn't fill it within the typically 9 days, then it might be one of those gaps that it doesn't fill for like another 30 days. And then if it doesn't happen after that, typically most times it probably won't get filled. You don't have a lot of gaps that fill all the time. It's not super mandatory. Um, you might have about. I think I took some notes on this before. Um, so might have yeah. So then it looks like there's a few gaps that will probably take. It looks like there's about 12% of gaps that never get filled. Um, I mean, sorry, 12,000 were not filled during the day. Approximately 70% of the gaps closed occurred, and then 24 actually became 24 gaps. So there's about 24 gaps 24% of gaps that never get filled. So we know that. So sometimes just know that it might not always get filled. Another thing too is if you wanted to also know, you do have sites where you can look up gaps and it will tell you how many gaps you might have left, or how many gaps. So like for instance, people talk about we're gonna look at Tesla, right? So we took a Tesla. Tesla has 37 total gaps. 26 have been filled. 11 have not been filled. You can compare with the Fibonacci too if you want to like look at the levels. So then you can kind of see where the gaps are. So pretty nice move if you line them up, right? But as you see, we have like we have it's been 188 days, 178 days, 175, 174, all the way until 17 days for the most recent one. But we have gaps all the way from my birthday, March 24th. Yeah. So we have gaps. We have gaps for Tesla that far back, and that was at $88.40. We would need to retrace drop price would need to drop 87%. Like that's not about to happen. It would need some. If it happens, Tesla has fundamentally changed as a company. So looking at FireEye, we do know they got attacked, but I mean they're one of the best, and because they are one of the best, it means they could get better. It means they could get stronger, they could improve their infrastructure. The U.S. needs them at the end of the day. Like once this news broke out, people were starting like, "Oh my gosh, how you get hacked in your hacking company?" Bam, price drops. Then as people think about it, and people tend to like really think about it. Well, I mean, this company really is doing some dope stuff. Like it really can move forward in positive ways, and then people start buying the shares back. So I was gonna get in this trade because I kind of looked at a good opportunity. Um, because even before, I thought it was in the reaccumulation stage, which prices, in my opinion, reaccumulation. So when I look at it, I'll redo this for y'all. So we can do this over. Actually, so what we do is get rid of the Bollinger Band because typically you don't need a Bollinger Band on everything. I don't. It's kind of I like clean charts. Honestly, I use Wyckoff in the volume profile. Um, so as we see here, I'm only gonna go to the most recent dates, right? I'm not about to. I mean the daytime. I'm gonna look at the day from the last 2 months, 2 or 3 months, right? Well, maybe like the last month. And I would just say, okay, support here, but I don't think price gonna go back this far. So I'm gonna just put the price on the daily. So on the daily, I marked this up the other day. So actually, I did do it like I did it the other day. Um, I guess I think price drop. Okay. So we'll put the support line like here. Put the resistance line like right here. And then put like the support line like right here, right? And that's green. Okay. Actually, I just realized, no wonder this is weird. This is not fire. I don't know why I changed it. I was like, that is so weird. Okay. So this is like the daily resistance, and this would have been the support under the candle that dropped. And then so once I saw it here, you notice like, okay, price could drop back here. So how do I want to play this? You could think either wait for a price to come back, pulling back here, or you could say I'm just getting here, or you could say, well, maybe you want some type of confirmation. So you notice this gap, and with the gap, you notice that there's a gap here. Let's make this yellow, and then the gap would have been here. So see how like price is funny like this. Like look at this. So we know it's a gap, and people typically say the gap needs to get filled. The gap needs to get filled. So the gap needs to get filled, right? So then the next day, 2 days, we see as price drop. One, it didn't fill that day. Then it filled the next day, and then it filled the third day. But it was coming into the gap. So this is where people would have probably got their entry in. Some people would have got in this first day and would have probably got in there and then would have probably made their stop loss somewhere like around here or something like that. Because if they would have got up here, they probably would have made their stop loss line kind of here. Yeah, they probably would have made it like right here. Somebody like retail, like other retailers would probably would have made a stop loss like right there. If that's what they was trying to, if they was day trading in stocks or something like that, or maybe even options too. Some option players, so they would have probably made their stop loss like right there. But like me, I don't typically use stop loss when I like options, honestly, unless I'm day trading. Well, I don't day trade, so well, I don't day trade often. um, but I do not recommend day trading. This is not we are not a financial advisor or fiduciary. This is for entertainment and information purposes only. So, with that being said, um, what I would say is that this would have been a good entry point to get in, or even at the top of this candle here. That would have been like my. So I saw it came up, bam, price, and then came up here just like this was just a tease, just to tease you. You know what I'm saying? And and this is how you need to go on the smaller time frames to really analyze it, break it down, right? So now that we see that it gapped up, and then people got in, probably would have got here, they would have got probably stopped out because they would have been like, oh, stop losses might have been hit, or if they would have held the ride, because maybe they would have had a deep stop loss, um, and then this would have been a good entry point back here because if you see it here, it came here, but it's really the volume didn't push up, so you're not really getting a good amount. Like the sellers really dropped that back down. So if they dropped it back down and they try to fight again, sellers said nah, and they still dropped the price back down, right? So then we got here, which this would have been a really good entry point here. So getting a good entry point here, if you miss it still, then you still got another chance where you could figure out that this gap right here, you could have made an entry point above the gap to see if it's going to start filling it in. And once it starts filling it in, you ride that wave. Fortunately, I missed it. Um, Sucks, but because they retest, like price always tends to retest. And you see, it even made a gap from here to here. You see, the 15th and the 16th. So you have another gap here, and then price came back to refill it here. So always think about gaps as most of the time you can fill it, and you can play gaps because gaps tend to turn into like a support and resistance themselves in a way. Because you see, is when we dropped here and there was a gap, that's technically creating an imbalance. So now we have price comes back, comes down, and it comes back and tests this, and then it came up again, and this time it didn't test it; it just broke through. But like now it's support. So gaps can become support and resistance. Like remember that. And gaps need to get filled in most cases. So now you have to have price fill it up. So really cool, really dope. Some people trade just strictly off gaps. You could trade just off gaps, and you could just do it like that. People do it all the time. Make a move. Because gaps tend to need to get filled, and they'll get filled eventually. You'll see it somewhere. Um, Hope this was helpful. Oh, actually, I'm sorry. I had another one to show you that I got in. Didn't play out the way I wanted it today, but it's okay. So looking at Riot had another a gap as well. Popped up. So let's say you want to get in Riot, you're like, man, that's a high ride. You just want to get in for a little bit. So what you will do is you'll notice that, of course, you're playing this too high, but you want to just ride the wave for a few hours, right? Or maybe you just like you already plan to say I'm gonna get in here because the price cheap. I'm just average down, right? So you could say this would be your load the boat line or something, and then you create another resistance. I mean support line. And the resistance line, like so, looking for where it's gonna gap down. I mean, it gapped up, and you notice that there's a gap here. So zoom in, break it down, like we break it down to the 1 hour. So you're looking at a price like this from this way, and you tell yourself gap price is going to it's a gap here. So notice it's a gap. So trying to make this like we did this on the 16th. So we know it's a gap here. So we'll say, well, the gap needs to be filled. So we'll make this resistance line actually what was the resistance a little bit. We'll say this would be our entry for the gap. So we can say entry point here So that would be where we would enter it technically if we was to um, where's the text box? So we'll say, okay, we're gonna enter on this gap, and then that'll be where we enter and look at getting out. Let's say we would get out at the resistance of this level or this level. So what we see here, right, though, is like we have this gap. Um, as we see, kind of didn't work out in our favor the next day, because as we see, price dropped into the gap. We would have entered here, but then the next day, price dropped back down to this level and filled the gap again, and it's now testing the support. So this is really good. It opened higher than this one, so maybe possibly, hopefully, price. Sorry, not hope, but what we can see is that since price did kind of open up higher than the previous day, close higher than what the open was. This could possibly go back up for a bull run. So we'll just have to see. But that's also was an entry point based on the gap on the right. I don't think there's anything else I could show. Oh, this is a nice one too. So it's really kind of choppy a little bit. This is where you kind of say, hey, let me just make this a little bit easier on myself, right? So we know where there was some gaps. Right, so gap right there. It was it was a gap, and then it got filled just recently. So price came back, and then tested where the gap was, and then dropped right back down. So if you would have saw this like the day it happened, a few days later, and you noticed the price, could have got your entry point to say you enter at the gap. Maybe you see it, you say, okay, it's kind of choppy. So what I'm gonna do is price came back, it jumped up, came back down. So you could probably say you would enter here. So a good entry point would have been somebody would have entered there. Most people would have entered because people like people like me, I like to get the bottom. I just like the idea that I got at the bottom. So me, I would have tried to get back in here at this level, or like I probably would have been around this level. So this would have been like the entire area that I would have probably tried to get in. Um, let me show you a better. I want to show that a little better way. So you could have. This would have been a good entry point. Price didn't come back down though, so you would have probably missed it if you got your entry point to be at the bottom. Um, yeah. So depending on how you play this could have been. Some people would have just played when they got here smart money moves techniques. But all right, so but as we see here, we have the gap here. This need to be something better than this. So we see there's a gap here. So what you could have did was, depending on what day you saw this, like let's say you saw this on the 17th, you see it going up. So if you would have saw that, you would have noticed, okay, there's a gap here. Even though it's filling this gap, there's a gap again here. So you would have been like, okay, there's another gap here. Now that needs to be filled again. So it's the gap within the gap. So now that we have a gap within the gap, I would have said that this needs to be filled. So you could have said some people would have been like, I'm gonna play my entry point here at this gap being filled, or I would have played my entry point here because this would have been considered support. See, price always like to try to make people like shake you out, like hit the support, then price came down, then pushed back up to just shake out retail traders or whatever investors, anybody that's trying to get in and put their stop loss possibly because like people put their stop loss like depending on what like at 1190 people probably would have put their stop loss at like 1186. I don't know, maybe people would have probably put their stop loss at like 1175, hopefully maybe not, or most people probably would have put this at 1182 or 4, but price came down, try to shake people out, and now price going back up. So this was, and as we see. But if you would have started before, you would have known this needed to get filled, and it got filled by basically pushing price all the way down. So technically, there's still a little bit of a gap. Yeah, there's still a little bit of a gap. So, you can play gaps. Hope this was informational. Hope this was helpful. Um, this is actually the last one. So hope this was helpful. Let me know what you think. Put any comments. Let me know if you know any other techniques with gaps. Um, Hope you found the value in this. Have a happy holidays. Thanks for tuning in.